Okay, guys, I've just gone to market on the DAX. It's something I've been tracking for the guys. It's slammed straight into the trade. It's now pulling back on itself. It's could be better, but it's kind of to be expected. So I'm not really worried. Premise of the trade was the break of a level based on the current momentum, and I was expecting it to push back. Now, I'm happy for this to go against me quite a ways for it to then slam forward. Okay. Now, the trade itself should be okay. Okay. Now, let me just kind of pull something forward for you. So if I pull this down, we do what's called a trade tracker at the moment. Now, currently tracking these two, which is pound JPY, which wasn't that clever at the time, but I'm also doing the DAX, okay, and that's done here. Now, both of them started early on this morning at 7 o'clock, so it's now currently 20 past 9. I'm a bit late at the party because I had a live call with the guys and I wanted to go through a few things, but caught up. Drop it into the market updates, and again, they can start seeing that is there. 20 past 7 goes in. You can see the strength. Now, the euro is pretty low. Now, that'll put pressure into the DAX, which is something that I like to see. Okay. And then as we go through it, so come along. DAX was the first one I looked at. There was no trade in and around then. Looked at it again with pound JPY, and again it's telling me to wait. Don't like trading the open, so I had to wait through till 9, and then here we are. There's the two of them. So there's no trade on pound JPY for this hour, but there is on the DAX, and it's telling you it can be a bit shirty. So 20 odd pips wants to be about right. So what I decided to do was go in and kind of scale it. So that is there. It's currently doing okay. So for this to slam down and do 20 pips out the pair of them, I'll be more than happy because it's currently net positive, even though that's red. The other one's paying it out. And the premise of the trade is slam down, saw the close underneath this level, which gave me the idea to go to market. It triggered in a little bit, which is slammed it straight away. I was like, bugger. But not to fret. But if we pull this out to the hourly, we can kind of see what's going on. Well, pulled up against this particular move here, and then it's worked its way steadily down into it. And it could well start looking to go to the bottoms of this move here and run at these. But markets being markets, I just want to be in and out quick. Now, if I draw a fib on this from that wick to this top wick, what it starts showing me is that it's collapsed under the 50%, which is here. Okay. Now, the longer it stays under that, the chances are it's going to go to the lower point. Well, it danced around it, tried to push away, failed, and then has collapsed through. Certainly smashed through the 61, which is here. Okay, so its next running point or area of attraction would have been here, which means it's going to run to this. So we're looking to sell off this level here, coupled with the break of this level here. Gives you the trade idea, and then we're just going to run down into a conservative target and hopefully get paid in the next hour. Okay, we currently net positive, and we should be all right. So let's play this one off and see what happens with it. Okay guys, that job is now complete. It started to struggle a little bit, as you can see, turning green in and around this level. But what I took the decision to do was I've worked the bounces along here. This can easily run off, not bothered, because one of my rules is this. Okay, just pull this across. If I'm working this, I look to this rule here. When I hit 200 plus, 2 wins, stop for the day. I've succeeded in doing more than 200 quid. There it is there. So those little bounces, bang, 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 they all add up. And it gives me a half decent payday. Now, let me just make certain. Yeah, got no tickets left. So all of that action there, rather than going through a lot of pain, backwards and forwards, take your money. And that's it. Now, if I choose to go to market again, fine. It's coming on to 10 o'clock. I can look at it and I can go at it again. But I don't need to. I'm paid for the day. I'm being paid enough for what I want. And that could be one of the crucial factors of trading, because over trading is a killer. And it's very easy to get caught up in sort of the excitement and one thing. No, I put a thing out the other day saying I was considering just doing one asset, maybe it's two, sort of like pound JPY, US JPY. Why? One in the morning, one in the afternoon, and look for 10 pips. Now, the idea behind that is some people have limited time. So it's really just a one-hit wonder. But it's also shown you that you can compound up just working day by day by day. Now, certain people sort of say they don't see the point, but, well, that's fine. You're not doing it. And I was doing it because some of the guys had mentioned it in the group. And what about just doing this? And it's something I've done pretty much all my trading career, because you don't have to be in the markets that much. Not at all. All you need to be is making your money work for you. And if it just steps forward, even just a fraction every day, all those little bits add up. Think about it this way. How much does the bank pay you a year? I mean, I think one of my basic sort of savings accounts gives me about 4% a year. Well, as long as I do 5% a year, I've made that money work for me. So really 5% broken down across a year is minimal. I don't have to force the markets, because the moment you force the markets, you've lost, because you can't sustain it. But if you just take steady steps and stop when you're paid, and then do it again tomorrow, but do it while the markets are moving, in this case, this morning, you're fine. Simple way of trading, guys. And it's a different concept to what you see in the land of make-believe, or what you call Instagram. Because contrary to belief, it takes money to make money. So if you haven't got a lot, you've got to build it up. And if you're risking it all the time, what you'll find is you'll move forward quite a way, but you'll slam backwards a hell of a lot quicker, and you end up just spinning wheels. Whereas if you took the first trade you won and walked away, and then come along the next day and did it, you'll find your hit rate is very high, because you were patient waiting for the trade, and your money starts increasing naturally. But if you chase the money first, well, probably going to have a hard time of things. Something for you to think about. Anyway, I'm always about. Drop down in the description. You'll see various tools and bits and pieces about me and my contact details. And I answer every single one of them. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you on the next one.